What's up everyone, Dylan here. I wanted to hop on to do another episode of the weekly analysis video. With that said, we'll hop right into it. There are some key events to look out for this week, including CPI on Wednesday, PPI on Thursday, and consumer sentiment on Friday. We're going to hop right into the price action and talk about what's been going on. So, the S&P and the Nasdaq remain resilient, and both futures are seeing less than 4% from all-time highs. So, despite a few pieces of bearish context that have surfaced over the last few weeks, the bulls remain resilient and continue to relentlessly buy dips. Okay, so last week we had a few economic numbers that pointed to a slowdown in growth, and while inflation remains slightly elevated as well. So, however, again, the price action remains very, very bullish as the bulls have been printing not only higher highs but higher lows as well. So, there's a very, very important piece of technical analysis that I want to point out that I have been focusing on for the last couple weeks. Okay, so we have this very, very nice channel that has been respected numerous times, both in terms of support. So we have two different areas that the bulls defended support, and then to the upside, we have a resistance, right? The top band of this channel has acted as resistance multiple times, where each time it gets up there, the bulls struggle to sustain value, while the bears are defending that general area very, very nicely. Okay, on the downside, right, we also have this trend line that the bulls have been doing a very, very nice job in terms of defending, right? So you could draw it like that. You could put it down a little bit to make it, line up a little bit nicer, whatever floats your boat. But in plain English, the price action is getting very, very tight. So ideally, if you are a bull, you would want to see the bottom trend line get defended for a move back up and out of this channel. Okay? At the same time, if and when the S&P futures get above that top band, which at the time of me making this video, it's right around 6,026, 6,027. If and when the bulls manage to break above that and sustain value above, right? Ideally, the bulls also want to see the Nasdaq take out Thursday's high. So if the Nasdaq can take out Thursday's high, which was 21,935, and the S&P also takes out the top of this channel, that would be ideal for the bulls, right? Ideally, you want to have both indices move in tandem, because if one is strong and the other is weak, that weak one can kind of act as a burden to the stronger one, extending its move to the upside. So when you have both indices doing the same move, right, moving in tandem or in correlation, right, it's better supportive of the overall market. So, again, if you are a bull, you do not want this band right here, this trend line right here, getting broken. If this trend line gets broken, I would expect the S&P futures to mean revert back down to this 200-day moving average, which sits right at the middle of the band, or of the channel, I should say. Okay, so if this trend line support gets broken, right, let's just say this little bounce, I would expect for it to come down here to the middle of the channel, which lines up with that 200-day moving average. On the flip side, as long as bulls stay above this this near-term trend line support, I would expect for the move to continue to the upside above this channel. And if the Nasdaq also participates and does its part, I believe that the indices can both extend their rallies to the upside. Okay, so let's talk about some of the negative pieces that we have been seeing, despite the S&P and the Nasdaq remaining very, very strong and resilient. Last Thursday, Tesla plunged as much as 17.5%, which was its largest ever market cap plunge in a single day in history. Okay. However, two good things about this, right? Two good things that can come to this. A, that move confirmed that Tesla is a very, very concentrated name. What do I mean by concentrated? Okay. What I mean by concentrated is the fact that it doesn't have much of an influence amongst the other mega cap names, right? Something like Nvidia is very, very influential. So if it has a massive day to the upside or the downside, it brings other mega cap names with it, right? It's basically the king of the semiconductor sector. So if Nvidia moves in a big manner, more than likely it's going to drag, say, AMD, Broadcom, and some of the other AI and semi names with it. With Tesla, it's kind of in its own little sector where it's not too influential, where just because Tesla dropped 17.5% on Thursday, the other mega cap names were holding up relatively well, which absorbed that selling pressure from Tesla. Okay. And as a result, what happened in the indices? The indices held up pretty well. So, yes, they did sell off, but by no means was it in a large caliber. Okay. So, that's one thing. The second thing that can come from that Tesla move on Thursday was the fact that it clearly showed that there is still a ton of dry powder in this market because the the dip buying frenzy continued. So every time there's a big dip in this market, whether it's an index based move or a single name stock such as Tesla, there's a serious amount of buying pressure that comes into the market to support those large days. So again, Tesla dropped 17.5%, which was its largest market cap plunge in history. Yet there was a $500 million injection into the levered 2x Tesla ETF, which is TSLL. So TSLL is a levered version of Tesla. So it's a 2x ETF of Tesla. Basically, what that means is if normal Tesla, right, TSLA, the normal company stock, moves 5% to the upside, chances are TSLL is going to move 10%. So it's basically doubles the net change of what the normal single stock does. Okay, so since inception, right, this thing came out in 2022. You can see since inception, Thursday was the highest volume ever. Okay, and the report that I saw, it said $500 million worth of stock went into this thing, but I think what they meant was it was 500 shares of volume. Okay, because what was the volume? Let's see. So there could have been a typo on that particular article, but the volume on that day was 557 million shares, which is crazy. And since the lows of Thursday, this levered stock is up almost 30%, which is crazy, in a matter of 3 days. Okay, so again, despite that negative move in Tesla, two things happened. A, both indices stayed resilient, and B, it showed that the bulls are very, very active. Any chance they have a large move to the downside to buy, that's exactly what they do. So that is in theory, that is a bullish thing for the overall market. So again, TSLL, it was the fund's largest daily inflow since it launched in 2022. Okay, and what's helping this recent move in the indices is the fact that VIX is very, very weak. Okay, so there was a level in VIX at 1855, which was the previous swing low from, I believe, from April, if I'm not mistaken. Let's see. From late March. So from late March, 1855 was that previous swing low that occurred on March 25th. You can see last week it bounced right at 1855 and moved to the upside. Okay, that coincided with a move in the S&P to the downside. That was the day that Tesla absolutely crapped the bed. Okay, however, since Friday or Sunday, right? Sunday night reopen, this thing has gotten back below 1855 and it has stayed below. So the lower the VIX goes, the less pressure is on the S&P, allowing for bulls to buy the dip more easily. So as long as this thing, right, the VIX futures stay below the previous swing high, which sits right at 1885, right? As long as it stays below there, I would expect that the S&P continues to get bought above this trend line, right? This near-term trend line. Okay, so if you are a bull, ideally you want the VIX futures to stay below 18.85, which was Sunday night's high, right? Last night's high. Okay, and then if the S&P breaches below that trend line and heads down towards that 200-day moving average, 20 would be the next spot to look out for on the VIX. So if the VIX were to take out this 20 level, then the S&P can continue to the downside. However, if if S&P breaches below here and goes towards that 200-day moving average, as long as the VIX futures stay below 20, I would expect for the bulls to defend that 200-day moving average pullback in the S&P futures. Okay? So that is that. That is what I'm looking at going forward. In terms of a commodity play, because I've gotten some feedback saying people want to see some commodity stuff on here, so maybe I'll tease you guys a little bit. This is a play that I am looking out for going forward, right? It's on soybean meal, okay? Soybean meal has been very, very, very choppy, and basically it's been in a very, very clean accumulation pattern where this thing has just been going sideways, 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 but it's sustaining value. So if this thing takes out 299.5, 300, right? That general area between, say, 299 and 300, if this thing takes that general area out with momentum and moves to the upside, I am interested in taking that breakout to the long side. Okay? There's a saying in trading that goes, the longer the base, the larger the space. Meaning, the more time an asset or instrument accumulates sideways, right? The longer the base, the longer it does that, where it chops sideways, the more potential for the space that it has to break out or break down. Okay, so I think if this thing really, really has some momentum to the upside, it will set up for a nice breakout long. Okay, so that is it for me. If you guys liked the video, I always appreciate everyone's support. Feedback is always appreciated as well. And I will talk to you guys soon. Peace.